Are you building a billion-dollar company? Then the most important thing is to align your customer acquisition cost with your customer lifetime value. In this video, we are going to discuss the customer acquisition cost for the mice customer segment. And welcome to the 3 Club. If you are chasing the mice customer segment, let's have a look at how you have to align your customer acquisition cost with your customer lifetime value. And if you are new to our channel, I highly advise you to check the SaaS metrics video to know more about the terminologies like ARPU, CAC, CLV, and others. Understanding your business metrics is the most important thing for the success of your business. In that video, we also showed how to calculate these KPIs with simple examples. In addition to that, if you don't know what the mice customer segment means, we created a video on the animal metaphor used by the salespeople to represent the customer segments. I will link both the videos in the description below. You can check it out to know more about SaaS customer segments and KPIs. So what is the acceptable customer acquisition cost for mice? The answer depends on a lot of factors that are very specific to your business. But I'm going to present the numbers based on the industry benchmark that most billion-dollar companies in this customer segment have. So we start with the values that you already know. Let's start with the average revenue per user, or ARPU. For mice, the ARPU per year is $100. The industry benchmark for annual churn rate is very high for the mice customer segment, because small customers go out of business at a higher rate, or they don't invest too much time to learn your product. So the annual churn rate for mice is approximately 50%. If you have this ARPU and churn rate, with an 85% gross profit margin, which is the common profit margin for leading SaaS companies, then you have a CLV of $170 per customer for mice. The last number that we are going to calculate is the acceptable CAC for this customer segment. According to the industry benchmark formula for calculating CAC, you need to take the lowest number, either 25% of your customer lifetime value, or 18 months of your gross profit margin. The lowest number is acceptable, because you can't spend too much of your CLV for CAC. At the same time, it's also important that your payback time is not too long. Otherwise, you can get into cash flow issues. Based on this simple formula, the acceptable customer acquisition cost for mice is approximately $40. What does that mean for your marketing strategy? And how can you acquire 1 million mice with a 10% trial to paid conversion? With a 10% trial to paid conversion rate, you need at least 10 million trial signups. So if your customer acquisition cost is $40 per customer, you can spend $4 per trial signup on marketing. $4 per trial signup is not a lot of money to acquire a customer. So you don't have a lot of money for these trial signup, and most of your leads have to come organically, if you're trying to get 10 million trial signups. In that case, you need a viral loop inside your product. Or you should get all of these signups with a lot of SEO and inbound marketing. But it's pretty rare to get millions and millions of signups with SEO and inbound marketing with $4 per trial signup. So your product needs some kind of product virality in it, and the conversion must be completely self-service at these mice level. You cannot afford to use a sales or customer service team for a $4 per trial signup. So the conversion must be completely self-service for acquiring a big chunk of the customer. These are the limitations when you're acquiring customers of this big size. But limitations don't mean that this is impossible, because we have successful companies like Evernote and MailChimp in this customer segment. That's it for now. What do you think is the best sales and marketing strategy for this customer segment? Let us know that in the comment section below. Currently, we are working on other videos related to SaaS. So please subscribe to our YouTube channel, or follow us on LinkedIn or Facebook for the upcoming videos. And if you learned something from this video, then please hit the like button. I will see you in another video. Until then, bye.